Good morning, ladies and gentlemen. It's Wednesday, right in the middle of the week. The markets are in good shape, third successive day of gains, and that's because of a nice GST rejig reclassification that was announced on August 15th, which will take impact before Diwali. And of course, the ratings upgrade that's happened in India for the moment. The Nifty now battling 25,000. This is a resistance level that refuses to go away for the last three trading sessions, but the mood is buoyant on the Dalal Street. Look at how value buying, bottom fishing is happening on the IT index, 516 points higher, 1.5% up at 35,273 for you. All top guns, which is TCS, Wipro, Infosys, HCL Tech, and of course Tech Mahindra in top shape after a dismal June, a dismal July, and of course some selling coming in August as well. But mood is good and buoyant on the Dalal Street. 1678, 1680 shares are in the green compared with 874 which are in the red. So the advanced decline is an easy 2:1, which means that for every one share that is in the red, you have two that are in the green. Strong momentum seen in IT stocks, FMCG, metal, mid caps, small caps are all in buoyant shape. To discuss this and much more, we have Mr. Sharad Avasthi, Head of Research for the Private Client Group at SMIFS Securities, joining us from the city of joy, Calcutta. Namaste to you, Sharadji, and a very warm welcome. After months and months of pain, you have this mild, brief spark of happiness on the Dalal Street. How are you reading sentiment?
Well, I think as you rightly mentioned, the broader imprint is very positive, whether it's the rating improvement, some resolution probably on the US tariffs also. I think the first 25% was something we took in our stride. The second 25% is that hits us hard. The only point that I'm afraid right now is probably, that with this GST cut or rationalization, as whatever way you call it, I think with this being already announced, maybe the green shoots of consumption that we were expecting in a lot of spaces, it might be, kicked down the line for around 2 to 3 months, around the time by when these announcements fructify. So that could result in this, consumption revival that we were expecting across the board. General consumption, yeah, that will continue to be there, but I think the high ticket items, which are consumer durables, autos, I think that might be kicked a bit later in the year. So that is one probable risk that might lead to a non-challenge, non-interesting kind of market for the next maybe 2 to 3 months in terms of macro data. But yeah, in the long term, I think the indications are very positive. 1 year, 1.5 year, even 6 to 9 months. I think most of these should fructify into very positive developments. The NBFC relaxation, liquidity in the system. I think largely everything is positive. Maybe the consumption juggernaut, takes shape maybe 2 to 3 months later than what I was expecting. That's the only risk point.
I think that's very well described. I think uh, uh, all uh, uh, all necessary conditions for a strong second quarter have been met. We've had a 100 basis rate cut by the Reserve Bank of India in the last 4 months or so. That has made credit cheaper. We've had an income tax bonanza coming in the budget in February. That's given rising disposable income. And with these recalibration of GST rates, a lot of household items such as, cars, bikes, brown goods, FMCG, all of them are going to get cheaper, so money is going to go longer. That, of course, is going to spark a consumption boom. At least that is what theory says. Now, let's get to Sharadji and try to understand what his research team has come up with. Sharadji, with a very busy weekend that I'm sure you would have had because of two major developments, now tell us what has your research team thrown up in terms of top picks because of these two changes, a ratings upgrade and two, GST recalibration.
I think this GST recalibration is something that will certainly be positive for autos, particularly two-wheelers and four-wheelers. And as you rightly mentioned, the tax cut is also something that would be very favorable for two-wheelers. So I think the two-wheeler auto ancillary story is very strong. I think even the defense stocks after this correction, they look like a very decent bet. Not really connected to this, but connected to this, I think the two-wheeler story is very attractive. Within FMCGs, you could do a bit of pick and choose. So something like a Jyoti Labs, Dabur India, the second lines, maybe the likes of Honasa, etc., could be very good bets that we are looking at. Because in addition to all the things you mentioned, I think even the pay commission effect will also be there, so that adds another consumption boost. So most probably, across the board, maybe FMCG with select choices. The frontline FMCGs, I still think the valuations are a tad on the expensive side, but something like a Dabur, Jyoti Labs, Honasa, these could be good ideas. On the two-wheeler side, I think Hero continues to be our top bet. That continues to look like a very good idea to us. And even I think real estate could be something that could be making a comeback. So maybe the frontline names, they might be a tad on the higher side. But there are companies like Keystone Realtors. We are looking at Suraj Estate, Shriram Properties. So these could be good ideas you could look at.
Okay, I'll request the PCR to kindly show the long-term chart of Hero Motors. This is a very interestingly poised stock. If you look at the recent move that has happened, it's a very, very strong gain, and this is after the stock has corrected substantially. We've seen a high of somewhere like 62.25. This was in September of 2024, exactly a year ago. And of course, this rally that has started about in August when the stock was at 4200. So 4200 to 5200 has happened in the blink of an eye in a span of 1 week, 2 weeks, and yet the stock is attractively valued. Sharadji, there is anecdotal evidence that shows that a good monsoon is beneficial to Hero Motors because mostly their bikes are sold in rural India because of good mileage, because of relatively lesser cost. Do you agree with this hypothesis?
I think on the rural side, they're a strong company because of the distribution reach and the type of, brand vicinity that probably Splendor has been giving them for a very long time. So I think that is the main reason, and it is easier to maintain. And rural India can, work on very different type. We'll remember it was what Pulsar or Caliber, something of the Bajaj, which was a favorite with Dudhwalas. So the milkmans were very favored of this because it could carry those bulk rates. So they have those different reasons, why they buy. I think Splendor is something that is a very strong franchise in the tier two cities in rural India also because it can take, the various roughness, etc. And the other thing that would be very positive for Hero is that, they started their separated R&D focus around 2017, and now most probably it usually takes 7 to 8 for that R&D focus to yield results. So now that is starting to show in the results. They had a
Okay.
launch on 2 weeks back that showed. I think there has been a launch yesterday or today. I think they are showing a bit of difference in terms of what the launches have been. So last 5 7 years, the new launches, if you look at them, you can't really be very excited about what was being launched by Hero. But now I think that R&D effect should start showing up in the launches. Usually it's a 7 to 8 year cycle. And then exports also opens up another opportunity. On the domestic side also, I think ample opportunity for them to grow. So all in all, I think, yeah, even the rural side, it would be less of monsoon. Monsoon gives you a bit of kicker, but I think their reach and their brand establishment in those regions, that's very strong.
Okay. The other very interesting rally that is happening is in auto ancillaries. Sharaji, look at Gabriel. There is a very strong move coming into this shocker maker. Mostly two-wheelers are doing very well. Look at Munjal Auto. There is a lot of move happening in Shriram Pistons. This is a company that makes pistons for four-wheelers. Across the board, you have companies like Banco India, Lumax Industries, Olectra, all of them doing pretty well. Within the auto ancillary pack, what are the top 2 or 3 picks that SMIFS has shared with its private clients?
I think Samvardhan Motherson is one idea we are still looking at. Even for that matter, I think some Motherson wiring would be a good idea you could look at with more focus on the electric side of the business. I think that could also do very well. Valuations don't seem very stretched. There's been a long time where Motherson wiring hasn't really done much. And I think the long-term growth rates are attractive for Motherson wiring compared to Samvardhan. But Samvardhan, I think it's a broader basket, so that way also it looks like a decent bet. And the one offbeat idea that we have been looking at is Varroc, again, something that focuses on two-wheeler, four-wheeler lights. The differentiator for them is basically, that the whole technology is self-developed. They are not dependent on any international collaboration like rest of the pack. So I think that is one advantage that Varroc has. Though I think it's been a very long lean phase for Varroc post-listing, not much has happened. But I think that would be an interesting idea to look at. So these are the two, three ideas: Samvardhan Motherson, Motherson wiring, and Varroc.
Which one was the last one you said? The Sambardhana
Varroc,
twins, and the last one was?
Varroc, VARROC.
Okay, Varroc. Yes, yeah, Varroc is a Pune-based company. This is the OEM for the Bajaj Group. They also, of course, make a lot of stuff for four-wheelers in terms of LED lighting and all. But again, a very good play. Interestingly, Varroc is still available below its IPO price. I think 4 or 5 years of listing, but still no hope for all those who put in money in the first instance. Be that as it may, समय समय की बात है. Sharad ji, two interesting themes have also emerged in the market, which is a very sharp rally in hospital stocks. We will be getting the management of Apollo hospitals very, very shortly, just after Sharad ji's show. But is this a popular trade, Sharad ji? You are not a hunter in popular trades, and you generally go at stocks that are going a begging. What is the SMIFS view on hospital stocks, in particular Apollo?
Sir, I think about the whole hospital sector, I think healthcare particularly, there is a lot of demand gap that we have. This would probably be one of the shining sectors in terms of growth rates. If you look at longer term growth rates, 2040, 2045, I think this is a sector that is destined to grow at a very high rate. So maybe 1 year, 2 year, the valuations might look stretched across the board because healthcare across the board has gone up. But I think if you are investing for the long term and you're looking at a theme, which is not going to derail over the next 10, 15, 20 years, I think this should certainly be on your portfolio. Regarding Apollo, yeah, I think you can say that the valuations are a bit stretched, blah, blah. But I think the type of capex they are doing, the type of businesses that they're setting up, whether it's the pharmacy business, diagnostic business, so it's a whole chain now. And I think as they diversify more and more into newer geographies, the growth rates would continue to show up over the next 1.5 year also. The capex is aggressive. So I think beyond that, most probably it will not be as aggressive because the base will be much larger. But yeah, in terms of growth rates, I think they have established a model of a large hospital chain where they can, provide most modern and comprehensive healthcare services, which is the need of the hour. I think even urban centers are not fully equipped, leave apart the tier 2, tier 3 cities and the semi-rural areas basically. So I think there is a lot of scope, and I would continue to believe that Apollo might have more legs to go. Maybe 1.5 year you would have market linked returns, but long term I think this is certainly a space you need to look at.
Okay, fair point. And in terms of some other sectors, which is defense, Sharadji, a very decent, a very sharp correction in frontline PSU defense counters, whether it's BEML, BDL, BEL, HAL, the three shipbuilders, all of them have corrected substantially from recent highs. For a value picker like you, is this a good hunting ground, or are you staying away?
No, certainly. I think the long-term trajectory is very strong, and we have spoken about it for quite a number of times. Maybe valuations were a bit expensive, over the last 1 or 2 months. The rally was pretty steep. But now I think what are you getting HAL at around 30, 35 times, and most probably with the type of order accretion that is happening on the regular appraisal, regular interval, I think very easily these order books could be much higher. You would continue to doubt the execution capabilities, long gestation, yeah, that's a problem. But I think this is a sector that should be on your core portfolio over the next 10 years at least. I think these are all long gestation projects that these guys are doing. Mazgaon gets a submarine order, I think that would vault them into a different level. BEML, BDL getting orders on the export side, even on the domestic side, more offset clause kicking in and more domestic, parts coming into the system. I think that should flare that up. So I think across the board, whether it's explosives, whether it's missiles, whether it's drones across the board, I think most of these companies should do very well long term. So I would certainly use this tip to buy. I think to expect, that you would get these companies at 10, 11 times would be, a bit of a stretch. I think the moats are very strong. Not everyone can make a fresh entry into them right now to reap the benefits over the next decade or so. So I think these companies will have a lot of fancy. I think this dip provides a very good opportunity to make entry.
That's very well put. Sharadji, what about fresh money? Whatever clients are bringing to you on your table, are you deploying that more in mid caps, large caps, or small caps? How do you think has first quarter earnings disappointed you, or in the universe that you track made you happy? Could you share some names?
Uh, I would not say, Shailji, that the first quarter numbers have made us happy. They've been very lackluster, not much to talk about. But I think basically, the whole NBFC and banking story with the NPA rise in some agri, etc., that's created a bit of, nervousness around that. Maybe the broking and the exchange related stocks because of their own issues, they might have some problems. So I think these are the two spaces. Some of the capital goods stories, the likes of Siemens, ABB, they might be hung with pretty hard overvaluation. But yeah, in terms of disappointment, I think even probably Bale has disappointed this quarter. But that is an idea that we are looking at. I think long term, that looks like a good capital goods idea to bet on. So maybe this quarter's disappointment gives you a good entry point. Across the board, I think even IT has disappointed this quarter. So in terms of disappointments, I think banking and BFCs and IT, the MSME revival and the microfinance revival is getting a bit delayed. But I think that's okay. These are big cycles that play out over a larger frame of time. So maybe, over the next quarter or so, we will again start seeing that improvement. So they might show some improvement over the next 1 or 2 quarters. But right now, I think this quarter, yeah, maybe banking, NBFCs, and IT has disappointed. Uh, on the positive side, I don't think there is much to talk about across the board that what has looked very positive. Maybe some pockets in the auto space have given you some positive surprise, but most of the monthly numbers are already available, so I don't think there's much to it. The consumption commentary from most FMCG companies have been positive regarding urban consumption coming back. So maybe that pocket makes a bit of sense in terms of a bit of positive updates. But other than that, I think across the board there's not much to take home from Q1 results.
Okay. My final question to you, Sharadji, is on PSU stocks. We've forgotten them all.
No, I think the SBI is making a comeback. The management has been very aggressive. It is one of the largest PSUs we are looking at. And I think if we are talking about capital goods making a comeback, particularly the likes of Hale, maybe and Engineers India, even PFC. If you look at it, PFC, RSC, now the valuations are not very stretched. I think these are good ideas to bet on. Uh, on the oil and gas side, I think ONGC and Oil India are decent at these valuations, even though ONC stocks are decent at these valuations. Though the E&P side of the story would be more dependent, on new finds, etc., which may take a bit of time. But I think the OMCs are still decent bet at these valuations. So I think largely the PSUs would do well. Maybe Coal India is a good bet, in terms of your dividend yield, etc. But if the frontline stories are to be taken, I think renewable energy continues to grow. So PFC might be a good idea. You can look at ONGC might be a good bet. OMCs might be a good bet. Coal could be a good dividend yield and growth story. The type of diversification they are doing might take a bit of time, but I think these are good stories. So across the board, Engineers India and BHEL are very positive. I think valuations are attractive there if you consider 1.5 2 year kind of earnings. Engineers India, even on current earnings, it's positive. I think there is a lot of oil and gas capex. So I think a lot of PSU baskets can do very well going ahead. Maybe the metal and mining ones would be a miss,
Hmm.
but other than that, I think largely PSUs would do well.
Okay. With that, Sharadji, we'll draw to a close today. Thank you so much for your time. As always, it's such a pleasure listening to you. And of course, we'll remember Hero Motors and of course the mother son twins in the auto ancillary space as well, plus Baroque Engineering. Thank you for your time, sir. This, ladies and gentlemen, was Mr. Sharad Avasthi. Do join us in less than 5-7 minutes from now. The management of Apollo Hospitals will be with us to discuss not only first quarter earnings, but what the next 9 months, 2 years, 4 years hold for India's largest hospital chain, which has been a top outperformer and a multi-bagger over the last 4 years or so. Thank you for watching.